Okay, hello friends, hope you're doing well. This is the part two of accounts of companies, question and answers. Let's continue. We had stopped in the previous at section number 131. Now we'll continue with the further section regarding which ICAI has asked questions in the past. Okay, let's see. ABC company is a one-person company and has only one director who shall authenticate the balance sheet, profit and loss, and the board's report that they have asked. First, they are asking for, remember, a one-person company. Okay, they have clearly mentioned it as only one director. That is fine. One company, one-person company, meaning is that it is definitely having only one member, but it can have many directors. But here they clearly said that there is a one-person company which has only how many directors? Only one director. Okay, who shall authenticate the balance sheet and the statement of profit and loss account and the board's report? This single director will authenticate the balance sheet and the statement of profit and loss account and the board's report. Yeah, that is the answer. Let's go to the next part. Let's see this. Alter Limited has on its board of directors four directors. Okay, that is what they've said. First is W, X, Y, and Z. In addition, the company has Mr. Das as the managing director. Das is there. The company has also a full-time company secretary called Mr. Weiss on its roles, on its only payrolls. The financial statements of the company for the year ended 31st March 2022 were authenticated by two of the directors and it is signed by Mr. X and Mr. Y under their signature. That is what they are given. Referring to the provisions of the Companies Act 2013, they have asked to look into the following matter. Examine the validity of the authentication balance sheet and the statement of profit and loss and the board's report. So whether the authentication was valid or not, that we have to check. Second, they have asked, what would be your answer if a company is a one-person company and has only one director? That is what they have asked here. Okay. Now let's look into the answer. What they have said here is, see, the company has the financial statements have been signed by two directors. Okay, that is Mr. X and Mr. Y. That is these. However, when we look into section number 134, get sung the song. Okay, what is the song? This is in relation to my students. The students who are not my students, don't worry. There is a small tune. Okay, even you can remember this tune very easy. Okay? It is if authorized to not authorized in that one and second after that CFO, the end secretary. That is the song. So authorized to be if not authorized. Okay, now so here first you have to take an assumption that the chairperson of the company, it is assumed that the chairperson of the company is not authorized. That should be the first point. Now, when the chairperson is not authorized, then who will sign? Then two directors are required to sign. Not authorized in that one, he should be. So, out of these four directors, any one can sign. One can sign. And the second signature has to be compulsory for Mr. Das. Not authorized in that one, MD. Second, so after that, CFO. So in then you have in the end secretary. So in this, do you have Mr. Secretary, Mr. Y? Is the answer is yes. So Mr. Y has to also. Well, so who will sign in the end? Any one of W, X, Y, Z has to sign any one of them. Then Mr. Das will definitely sign because he is the managing director. And then one more person will sign, and that is Mr. Weiss. Why Mr. Weiss? Because Mr. Weiss is the company secretary. Well, here they have not given any detailed patient CFO. So we'll assume that the company has not appointed any. Next, what would be your answer in the case of one person company which has only one director who has authenticated the balance sheet, the profit and loss account, and the board's report? So, in the case of one person company, only one director is required to sign. That one director has signed, then it is valid. Well, that is in relation to this. Next one, let's see. The Companies Act 2013 has prescribed an additional duty on the board of directors to include a board's report, include in the board's report a DRS, the director responsibility statement. Explain the details. So all the students that learned from me, I think you very familiar with code called as PRINCE. Okay? Accounting standards, accounting policies, accounting records, annual accounts, internal control system, and you have your system. No, this is your internal financial control actually. This is your system. Now here, this they have asked in mock test paper August 18, and then me for 4 marks they had asked a question where they had written only explain the four contents of the DRS, director responsibility. Four contents is very not a problem. That completes this. I hope it is very comfortable. Yeah, let's go ahead. Yellow Limited has prepared its financial statement for the year 2021-22. Mr. Pratik, the managing director of the company, is declining to sign financial statement on the ground that it is only the duty of the board of directors to sign the financial statement as approved by the board, and he is not liable to sign. That is what he's saying. Remember, he is the managing director, Mr. Pratik. Now, Mr. Pratik has approached you to advise him regarding the responsibility for signing the financial statement. Advise Mr. Pratik regarding the responsibility for signing the financial statements as per the provisions of the Company Act 2009, like that they have written here. Now, how do you go about with this area? Okay, how do you first of all understand that whenever the situation is given the question where they have asked you to, give your opinion. At that time, you should ensure that you have read each and everything. You have to tell them what the company has done right and also what the company has not done right. So here Mr. Pratik is saying that he is not going to sign the financial statement. He says that is the responsibility of the board of directors. That is fine. So that you keep in mind. Like I said, Mr. Pratik regarding his responsibility for financial statement as what would you advise him? You have to give an advice to him. So here you have to ask yourself one thing: has the act been already done, or have they come to you before doing the act? Whenever the act is already done, then you have to apply the law and say whether they are guilty or not guilty, or whether they have done the right thing or the wrong thing, or whether they are complied with the law or not. Okay? But if the act has not been done and if they come to you for advice only, now for advice only if they are coming, then you have to write the provisions which are. Okay? Then they said, Mr. Pratik has also provided you the following more information. Let's see. First is the board as a policy does not authorize the chairperson of the company to sign the financial sheet. The company has appointed Ms. Sunena as the company secretary. That is what they're given here. Again, see, if authorized to not authorized, in that one, two directors should sign. If not authorized, that is, if the chairperson of the company is not authorized. Out of these two directors, one director who is signing should be the managing director compulsorily. Mr. Pratik, who is the managing director, has to sign because the chairperson is not authorized. Along with that, Miss Sunena also has to sign compulsorily because she is the company secretary. That is how the provisions will be written. Of course, as I told you that you have to write the law in the pack format. Pack is provisions, applications, conclusion. Very easy. Okay, let's go ahead. The board of directors of Vishwakarma Electronics Limited consists of Mr. Gansham, who is a director, Heather, who is a director, and Mr. Inder Sen, who is a managing director. Okay. The company has also appointed a full-time secretary. Secretary is also there. And then you have two directors here, and again Mr. Inder Sen, who is the managing director. The profit and loss account and balance sheet of the company were signed by Mr. Gansham, Mr. Heather. Examine whether the authentication of financial statements of the company was in accordance with the provisions of the Companies Act 2030. That is what they have said. They have said it is signed by Gansham and Heather. Again, same matter. See, two directors have only signed, but again, we'll assume that first chairperson is not authorized. So 2D have to sign. Out of the 2D who have signed, one of them should be a managing director. That is what we know. So out of the two directors who have already signed, two directors who have signed are Gansham and Heather. So this is now see, this is when the action has already been taken. The action has already been taken. You will say that see the action done by these two are incorrect. It is not proper. Now, how will you give them advice? You will say that see these two should not have signed. Who should have signed in their place? Two directors should have signed. That is out of Gansham and Heather, one of them should have signed. Plus, so one director out of Gansham and Heather should have signed. Plus the managing director, that is Inder Sen, should have signed. And along with that, because they have appointed a full-time secretary, the secretary will also sign. Secretary will also understand. Okay. Full questions, but that you should know how to tackle it. Next one. EVC Limited is a company with a turnover of more than 1,000 crores the preceding financial year, in 3 financial years, and have incurred a loss in one of the preceding 3 financial years. Okay. Will it be required to comply with CSR? That is what the question is. Now understand. EVC Limited is a company with a turnover. They have already given it as more than 1,000 crores. Very important language. The preceding preceding 5 is there incorrectly. Preceding 3 financial years and have incurred a loss in one of the financial years. Will be required to comply with CS. Now understand. In this question, you have to first write when is CSR applicable. CSR is applicable when the company's net profit is 5 crores or more, or company's net worth is 500 crore rupees or if the company's turnover is 1000 crore. Okay, one of these three conditions should be satisfied in the preceding financial year. We check in the preceding financial. This we check in the preceding financial. Okay. Now, once this is done, no, then we go to the next level. What is the next level here? The next level is, sir, once the CSR provisions are applicable, then what do we see? That CSR provision, will it continue forever and ever? The answer is, in a way, yes, but there is a caveat here. So understand, see, once the CSR provisions are applicable, no, then the company will be required to do CSR every year. Now, CSR provision will keep on going, keep on going, keep on going after it has become applicable. But now understand, there was this year and this year. Okay? Let's take this year as, let's say that the years are 18, 19, 19, the other three. Now in these 3 years, no, if the company does the company does not satisfy any of these three conditions not satisfied in all these 3 years, none of these conditions are satisfied. So understand, you will understand here. See, the net profit condition is not satisfied, net worth condition is not satisfied, turnover condition is not satisfied for the year 18. Again, in the 1920, net profit, net worth, and turnover condition are not satisfied. Again, in 2021, net profit, net worth, and turnover conditions are not satisfied. When 9 points, I hope you understand. That is, you can see 3 into 3. That is 9 points. If they are not if they are not, being fulfilled by the company as per these matters, they are not getting fulfilled by the company, then only you will say that, okay, now from the next year onward, that is from 21-22, company need not do any kind of CSR. They did not do. Till which point they will not do? Till the time they again hit one of these conditions, and then one of this is a tick mark. Suppose if in the year 22-23, company satisfies the net profit condition, they're satisfying. You will understand then from the next year onward, that is from 23-24, company has to do CSR because we are looking at the preceding financial, at the preceding. You understand? Okay. Company will not be required to do CSR for 21-22 and 22-23, but the company satisfies the net profit condition in 22-23. Then in the year 23-24, will be required to do CSR because company has satisfied one of these conditions. I hope it is clear. Okay. Now this was there in our notes. You have to properly write and ensure that you are getting the marks. Okay. Next one. Tirupati Limited, a listed company, has made the following profits. The profits reflect eligible profits under the relevant section. Fact 2030. Here they are given their last 3 years profit, which we are concerned. Now see, they have played a smart. Always remember, okay, they are given these 2 years just to confuse, just to see how much you're confident with the legal matter. There is one more question I'll show in relation to CSR only, where they are giving you the question just to confuse you. Okay. So here, no, these 2 years are just mentioned at 16, 17, and 17, 18. Just confuse the student. Okay. So don't get confused. Okay. Now see, what they have given is calculate the amount of CSR that a company has to spend towards for the financial year 21-22. How do you calculate CSR? Very simple. You take the average of these three, 30 plus 70, that is 100 divided by 3. The answer that you'll get. T into 50 crores. So 50% will be, I think it will come to 10 lakhs. Okay, to 10 lakhs will be the CSR expenditure. Okay, that is 50 crores into, here the figures are in crores. Next, you state the composition of the CSR committee of an unlisted company and a private company. They are given this data for a listed. Yeah? Now they have asked to give the composition of CSR committee for unlisted company and private company. What is the normal composition of CSR committee? CSR committee, in that minimum 3 directors have to be there, one has to be an. Our unlisted company and private company, it is possible that they are not satisfying the condition to appointment of independent director. If that is the case, then independent director will not be appointed, and the company can have a minimum 2 directors also in case of forming a CSR. Okay, so that is basic answer, again covered in the notes. Let's go to the next one. RERA Limited, a company incorporated under the Companies Act 2013, have a turnover of 100 crores, net profit of 3 crores, accumulated loss of 50 crores, and securities premium of 300. they have given the details here. As per the audited accounts of the company for the financial year 21-20, the CFO of the company informed the directors of the company that the CSR committee is required to be constituted as per the Companies Act 2013. The directors seek your advice as a professional regarding the criteria required to constitute CSR committee and whether it is applicable to Para Limited. That is what they have asked you. Okay? Now, and let's go a deep dive into this. Here, no, there is a hidden question. Now, when you read this, no, you will feel, oh, it is a CSR question. Of course, it is a CSR question, but before CSR, no, you have to also calculate something called as net worth, which is given in section 2 clause 57 of the Companies Act. You have to calculate net worth first. Okay, no. Now, net worth is what? Net worth is nothing but whatever it is basically the balance sheet of the company, but an accurate analysis of the balance sheet is called the net worth. Accurate analysis means what? In terms of knowing the company's worth, what is the company's value about? Okay. When you see section 2 clause 57, you will understand what net worth is. From in this case, what they have given is, so here you have a net profit of the company, which that is part of the company's net worth. Company has earned profit, part of its net worth. Then they have given securities premium account. So I'm writing SPA, and they have given it as 300 crores. Company must have securities at a premium. They must have formed security. And you will subtract. See, accumulated losses is not deducted from your net worth. No, so net worth of the company will go down because you have accumulated losses. So that should be deducted. Okay. This is again given in the definition. Okay, so you should accumulated losses is here 50 subtracted. You'll understand the answer will come to company net worth we get. It is how much? 250. Very simple. Now what they have said here is criteria required to constitute a CSR committee. Now out of whatever they have given us, turnover is something that we can use. Net profit is something they can use. And here we got the net worth also. So for knowing the knowing whether it will be applicable for a company or not, we need to know three things. That is net profit, net worth, and turnover. Correct? Now net profit of the company is how much? How much have they given? Net worth we calculated 250, and the turnover is how much? 100. But for CSR to be applicable, how much do you need net profit? You need it to be minimum 5 crores financially, or the net worth has to be 500 crores in the or the turnover has to be 1000 crores in the present. Is it there? The answer is no. If it is not there, then you will say that, see, boss, not getting satisfied. What will happen is we will not form the it is not required to form the CSR committee. That is what your advice to the director for me for 6 months. Okay. Next one. Examine the validity of the following with reference to the relevant provisions of the Act. Okay. Mary Limited, a listed company having turnover of 1200 crores during the financial year 21-22. The CSR committee of the board formulated and recommended the CSR project was approved by the board. The company finalized the project under its CSR initiatives, which require funds at the rate of 5% of the average net profit of the company for the last 3. This is the company's policy that they are given, that the company is ready to contribute 5% of its average net profit of the company last 3 financial years. Will such excess expense be counted in subsequent financial years as a part of the CSR expenditure? Advise the company. You know this very well. First of all, it's a listed company. Second is they are given here is turnover is how much? 1200 crores. Again, when is CSR applicable? When the net profit is how much? 5 crores. Net worth is how much? 500 crores. Turnover is how much? 1000 crores. Is it crossing 1000 crores? The answer is yes. Okay, so turnover condition satisfied. Company has to do CSR. Now, as per this company's policy, what they have said is whatever is their average net profit in the last 3 years, they take 5% of that. What does the law say? Law only requires you to give, but they are doing a better deed. They are doing a bigger deed. They are doing, good deeds, much more percentage of good deeds. So 2% was required. They are doing 5%. So the extra 3% amount that they are giving as CSR, they can use it to set off, as you know, for how many years? For 3. For 3 years. Simple. Okay. There is no correlation between this 3% and this 3 years. Huh? Don't say that, sir, next time if this answer is 10%, can we set it off for 10 years? The answer is no. It will always be 3 years only. That's that I'm telling you, 5% minus 2%, whatever is the amount, whatever will be the amount here, they are not given the net profit. So we cannot calculate the amount here. So I'm just taking it on percentage basis. So 3% is the extra that we are doing CSR work. So can we set it off in the next for the next 3 years? In the next 3 years, the answer is yes. By chance in the future years, in the next 3 years, if the company does a lower amount of CSR than what is required, okay, no, less than 2% if they do, then can they set it off from this extra amount that they had spent earlier? The answer is simple. Okay, that is inflation. Next one. Explain the following in brief with reference to the companies at 2013 CSR committee. That is what they have said. Now, see, whenever these questions come, no, explain the following in. The students, what they do is first they look at the marks. How much marks have they asked? 3 marks. So 3 marks means 6 points. That is what you are taught in school. Okay, no, whatever is the number of marks, do multiplied by 2, write that many points. So every point will get half mark, and you. Okay. So what my suggestion is, when such a question comes, when they are not specific, they have just said, explain the following in brief. CSR committee they have asked. What to do here? Because CSR committee, we know the composition of CSR committee, we can write on that. So we know the functions of the CSR committee, we can write on that also. So there is something called as annual action plan of the CSR committee, we can write on that also. So then what to write? What my suggestion is, whenever the marks are just 3 marks, no, write the composition and mention the function for 3 marks. So I would suggest you to write this for 3 marks. Now suppose the question is for 4 marks, okay, no, then write this entire thing for 4 marks, but ensure that is annual action plan you're not writing in like depth, you're just mentioning the key point. And whenever the question is suppose of 5 or 6 marks, I'm writing here 5 or 6 marks, then explain this and explain this. Because see, these questions which are given in as explain because what ICAI is expecting from you, that is not mentioned here. They just said, okay, talk about CSR committee. What to talk about? So to look at the marks and give the respective. Okay. The balances extracted from the financial statement of ABC Limited are as below, right? 2020. And see in this question, no, how the student particulars they are given net worth, that is as on 31st March 2021, 100 crores, and there is also 100 crores. This provisional they are given, provisional for half year ending 30th of September 2021. This for the entire year ending 31st March 2021. Turnover they are given 500 crores. Here they are given 1,000 crores. Net profit they are given 1 crore. Here they are given. What will happen? That exam pressure, no student will say, sir, they have asked whether CSR committee is required or not to do regarding all these. You have to always follow the provision. What does the provision say? Provision says that CSR committee, whether it is required or not, for that we have to see the net profit, net worth, and or the turnover criteria leading financially. It is never mentioned regarding half year or all these. This data ICS simply to not get confused. The student who will not get confused, and who has command over the legal matters. So if you know the law properly, then you will not get confused. Otherwise, see, in that pressure, student will say, oh God, see, net worth here is just 100 crores, 100 crores. So net worth is not getting satisfied at both the places. Fine. Turnover it is just 500 crores, but here it is 1,000 crores. Here it is getting satisfied. Net profit 5 crores, net worth 500 crores, turnover 1,000 crores. These are the three limits. Correct? Net profit here not getting satisfied, but net profit here it is getting satisfied. So what will happen is this 5 crores, so it is getting satisfied. So what will happen here is your brain will say, no, 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 see, these are getting applied, no. So these are getting satisfied, no. So SR is applicable. They'll write that answer in it. Don't fall for that trap. You have to always look at the whatever, let them give. Let them give quarterly, half yearly. They are not concerned. Well, so 3 mark question, good question. Just to test how well the students have learned. Next one. The board of directors of ABC Limited wants to circulate unaudited, very important, unaudited accounts before the annual general meeting of the shareholders of the company. Whether such an act of ABC enable. Whenever the accounts are made by the management of the company, that is the accounting department, when the accounts are made, the accounts get audited by the audit. All this as audited financial or audited account. Then it is placed before the shareholders, and the shareholders adopt the financial statement. That is called as adopted. That is called as what? Adopted. These are the three terms that you should know. The accounts are prepared, is audited by the auditor, and then we place it before the shareholders where they adopt the financial statement. Unadopted financial statements is still fine because you can still file it with the ROC on provisional basis. Some questions. But in no case, unaudited financial statement should be circulated. Unaudited financial statement, if they are there, if audit is only not done, then accounts have no backing, or accounts have no trustworthiness. So what it is like, you go to a doctor and the doctor says, you please bring a blood report, and you, in a piece of paper, you are writing there, and you're writing there, okay, blood report is hemoglobin is 8 RBC count, WBC is at this count. The doctor will say, boss, where is the pathologist report? Where is the blood report? He'll say, no, 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 that guy was not giving us. So, yeah, we did the blood test at a small place where that person is not a doctor, and he has not signed it. He just wrote all these criteria and he just showed, go and show it to your doctor. Will the doctor accept it? The answer is no. Same way, the auditor role, that signature is very, very important in the accounts of the company. Also, unaudited accounts, they have 10 years. Can you circulate it? The answer is, does such an act is tenable? The answer is, it is not tenable. You cannot circulate it to the members also. You cannot file it with the but first get it audited. Let's go to the next one. Reliance Industries Limited, a company incorporated under the Companies Act 2013, has its shares listed on a recognized stock exchange. No new knowledge. Okay, Reliance Industries Limited is a listed company. Fine. One of the subsidiary of Reliance Industries Limited is a foreign company incorporated outside India. Fine. In the annual general meeting of the company, Reliance Industries Limited has placed its audited financial statements in consolidated financial statements on its website. So they have said that Reliance Industries Limited has done what? They have placed their audited financial statement, standalone financial statements, along with their consolidated financial statement on its website. That is RIL's own financial statement. So if this is the Reliance Industries Limited website, what we'll do is we'll first write here Reliance Industries Limited has placed its standalone financial statement plus the consolidated financial. So it has done the right thing. Reliance Industries Limited has also placed on its website separate account or audited accounts of all of its subsidiaries located in India. Good. So Indian subsidiary, they have placed they have placed financial statement. That is also the right thing. They're written here, except one subsidiary, which is a foreign company and located outside India, on the grounds that such foreign company is not required to get its financial statement audited under the company law of its incorporation, or the country of its incorporation. That country does not require audit to be done. Now, Section 136 clearly says, if company does not require audit to be done and the company has also not done the audit, all my students, you will understand that we had done a company called A Limited. Remember the country Australia? A Limited was there. A Limited, the condition was what? The country does not require audit to be done. This was just an example, okay? Country does not require audit to be done. And the company has also not done the audit. Then can the Reliance Industries Limited put it on its website regarding this subsidiary? The answer is yes, they should put. What they should put? They should put the unaudited financial statements of such a foreign subsidiary. They should put on the website, even though it is not audited, even though it is not. Okay, that is what is written in section 136. You don't understand, simple to understand. Okay? Now they have written here, see, you are required to examine whether Reliance Industries Limited has complied with the provision. The answer is no, they're not complied with the provision. Again, this is a question after the act has been done by the company. The company has already done it. And then after that, they're asking you, examine and tell whether the company has done right or wrong, like that. Then you have to say whether the company is correct or incorrect, or whether they're complied or not complied. In this case, they have not complied because they have said that except one means they have not put the financial statements of this foreign subsidiary. Unaudited financial statements have not been. See, simple. Next one. Vandana Limited, based out of India, has many subsidiaries in India and outside India. Okay. It has it also had associates and joint ventures. For the purpose of finalization of the consolidated financial statements of the company for the year ended 31st March 2020, the company's management requested its foreign subsidiary based out of Italy to provide standalone financial statements regarding foreign subsidiary. The Italian subsidiary company prepares its financial statements in the local language of the country. Online the RC, local language of the country. It is in Italian, and the same is provided to the Indian parent company as unaudited, as audit is not required, by the Italian subsidiary. Please advise how should the Indian parent deal with such this financial statement. Indian parent means Indian parent company. Yeah? Indian parent means don't start writing for parents. Okay. Now let's see what is this matter here. See, first of all, there is a foreign subsidiary. Okay, we have the company called Vandana Limited, which is an Indian company. Now Vandana Limited has to place some documents on its website. Here situation is foreign subsidiaries has not done consolidated financial statement. Let's assume that they don't have a subsidiary. They have not written here that the foreign company, that is the Italian company, has a subsidiary. Okay, no, Italian subsidiary company they have written here, but they have not written here is that the Italian subsidiary company has its own subsidiary. They have not written. Standalone financial statement, is it fine? The answer is yes, it is fine. Second is it is in the local language. Now see when the local language is there, then certified translation in English. Yeah, that is what they have said. And they have written one more here, one more point here, that it is unaudited. Is unaudited fine? The answer is yes. We just saw, no, unaudited is fine. If it is unaudited, fine. What to do? Okay, maybe the country does not require audit to be done. So unaudited is fine. So what you will do is you will provide on the website this Italian subsidiaries standalone financial statement in certified translation English, which is unaudited. So it is unaudited standalone financial statement in certified translation. Understand? Yeah. Next one. The AGM of R Limited for laying the annual accounts thereat for the year ending 31st March 2001 was not held. Was not. What remedies available with the company regarding compliance of the provisions of 137 for filing of copies of financial statements with the registrar? Will it make a difference in case the annual accounts were duly laid before the AG on 27th September 2021, but the same were not adopted by the share? Now, first, let's see what is the matter here. First case is not held. You have two cases here. First is not held, and second is not adopted. So, not adopted. Yeah. Now, if it's not held, then what is the matter here? See, if the financial statements are not held, sorry, if the AGM is not held, then from the last date when the AGM have been held, you have to file the financial statement with the ROC. You have to file it with the ROC. That is the requirement. If the AGM is not held, then you have to file it with the ROC. From the last date when the financial statements are not held, within 30 days you have to file it. That is in the case of. In the case of this part, that is, if it is not adopted. If it is not adopted, then you have to first call an adjourned AGM. Second thing, because it is not adopted in your main AGM, that is the AGM that you conducted, you will have to file it provisionally with the ROC, within 30 days. And after it is adopted in the adjourned AGM, you have to file the adopted financial statements with the ROC within 30 days of the adjourned AGM. That is what the law says. Okay, I hope it is very clear. This is done in the class. Okay, all these concepts were done in the class. See? Next one. The government of India is holding 51% of the paid-up share capital of Sun Limited. So audited financial statements of Sun Limited for the financial year 2021 were placed at its AGM held on 31st August 2021. However, pending the comments of the Comptroller and Auditor General of India on the said accounts, the meeting was adjourned without adoption. They have said meeting was adjourned because the C and AG had not given their comments yet. The comments were pending. They were adjourned. Okay, now remember the meeting was adjourned. On receipt of the CAC's comments on the accounts, the adjourned meeting was held on 15th of October 2020, whereas the accounts were adopted. So on 15th of October, it was finally adopted. Thereafter, Sun Limited filed its financial statement relevant to the financial year 2020-21 with the Registrar of Companies on 12th of November 2020. They have said the financial statement was filed by 12th of November 2021. So now if you think, oh, 15th October 2021, it is the urgent AGM, they have adopted it. And within 30 days, you have to file with the ROC. So within 30 days is so 12th November. Within those 30 days, company must have done something proper. Some company is right in this case. Now they have asked you this examine with reference to the applicable provisions of the Companies Act 2013 whether Sun Limited has complied with the statutory requirements regarding filing of account. Now what will happen is many students knowing this, they'll say, okay, In your AGM, you have to adopt the financial statements. Did you adopt? The answer is no, because the C and AG's comments are pending. Fine. Now, what is the procedure? If in the AGM, if your financial statements are not adopted, will definitely call an adjourned AGM. So has the company called an adjourned AGM? The answer is yes. Adjourned AGM was held on which date? 15th October. Fine. 15th October 2021. Adjourned AGM. In the adjourned AGM, was it adopted? The answer is yes. Then you have to file it within 30 days. Have they done that? The answer is yes. So I'm just writing here filed by which date? 12th of November 2020. Have they done that? The answer is yes. So now the pending matter is what? Sir, in the AGM, no. If the AGM it is not adopted, no, not adopted, but you should definitely call the urgent AGM. But you should also file it provisionally with the ROC within 30 days of this. So when was this AGM supposed to be on? It was supposed to be on 31st. It was held on 31st August 2021. But did we adopt the financial statement? The answer is no. From 31st August 2021, you have to calculate 30 days. And within 30 days, you have to file it provisionally with the ROC. Has the company done that? The answer is no. So company has not complied with this requirement, but the company has complied with this requirement. That is filing within this 30 days. 30 days gap, the company has complied. No problem here. Are you understanding? So in the exam, you have to tell what the company has done right and what the company has done wrong. And then you have to say, see, these are the things the company has done wrong. You have to tell the examiner clearly. Okay, so be very careful in type of question. It's a very good question. Pick the student. Next one. Perfect Limited is a listed company. Fine. The company is in the business of manufacturing steel and had its head office in Karnataka at Karnataka. Okay. The company's operations are spread out across India. The company appointed a firm of chartered accountants N and Company LLP as its internal auditors for the year ending 31st March 2020. However, for the financial year 2021-22, the company is planning to have an in-house internal audit system commensurate with its size and operation. That is what they have said. If the company does that, then it is planning not to continue with N Company LLP as its internal audit. Now let's analyze this case. Internal auditor can be an employee of the company or may not be an employee of the company. Internal auditor may be a chartered accountant, cost accountant, or any other professional. That is what is for 138 or 138. Okay. For listed company, is internal audit required always? The answer is yes, because you remember there is something called which I had done with you all in the class. That is LO pot 25 100 200. That is listed company, always it will be applicable. Unlisted public company having outstanding deposits of 25 crores or more, or your unlisted public company having a paid a capital of 50 crores or more, or unlisted public company having outstanding loans or borrowings from public financial institutions or banks of more than 100 crores, and sorry, or any unlisted public company having turnover of 200 crore rupees or more. And of course, if it is a private company, then which 2 points will be applicable? Only these points will be applicable in the case of a private company. This is what we have done in the class. Now, because this company is clearly a listed company, then internal auditor is required. Next point is, sir, is it important to appoint a CA or a CS? Yes, the answer is yes. You need to have a CA or any other professional in case, or it can be a cost accountant also, but some professional has to be there as the internal auditor. That is very, very important. So based on that, you will say that, see, if this in-house internal audit system commensurate with size means as per their level and as per their size they have set up, it's a good thing, provided the company has a CA or a C or a cost account will looking into, only then this is valid, otherwise it will not, because they have said clearly that a professional has to be there doing the internal audit work. That should be there. You understand? Next one. Natraj Limited is an unlisted public company. We'll be taking the same example, having a paid up share capital of 80 crore during the preceding financial year 2000. The turnover of the company is 110 crores for the same. Referring to the provisions of the Companies Act 2013, discuss the answer the following. Is it mandatory for the above company to appoint internal auditor? Again, we'll apply this paid up share capital. This area, is it there? The answer is yes. You can paid a capital for unlisted public company. So is it 50 crores or more? The answer is financially it was 80 crores. Because it was 80 crores, we say that okay, internal auditor is required. They're given further information that turnover is 110 crore. Turnover they have said here as per limit 200 crores, but that's okay. Need only one of the condition to be satisfied. So your 80 crores is satisfied. So it is mandatory for the company to appoint an internal auditor for the next year, that is 2021. The answer is yes, because in the preceding financial year it is getting crossed. What are the qualifications of internal auditor? As I just said, the internal auditor may or may not be an employee of the company. Internal auditor can be a CA or a CS or a cost accountant or any other what X Limited, a listed company. Listed company having a paid up capital of 125 crores, turnover of 100 crores, financial year. The company secretary has advised the board of directors that X Limited is not required to appoint internal auditor as the company's paid up share capital and turnover less than the threshold. Do you agree with the advice of the company secretary? Explain your view referring to the company that Can 21. Just know this part. For listed companies, compulsory at the turnover or any outstanding loan or kind of paid a capital. We don't look at anything. The company is a listed company, internal auditor has to be appointed. The company is a listed company, the auditor has to be appointed. We'll write here that we don't agree with the company secretary. Kim Private Limited was incorporated on 30th September 2016. It has a paid up share capital of 45 crores. The company has a turnover of 2 capital is 5 crores. For the financial year 2020-21, the account manager of the company has intimated to the company that they are not required to appoint auditor, not required to appoint for the year 21-22. For 21-22, we have to look at the preceding financial year, that is 2021. We have to look again the same thing. They have written here private limited. For private limited, remember two conditions are required to be. One of these two. All these are remember or conditions. So one of these two has to be set. Either the company should have taken loan borrowing from public financial institution or banks of more than 100 crores, or the company should have turnover of 2 or more. Right? Whether it is satisfied or not. Is the turnover 250 crores or more? The answer is 200 crore rupees or more. Sorry, this should be 200 crores. 200 crore rupees or more. The answer is yes, it is. Right? Paid a capital requirement for private companies not required to be seen. Not required to. They have written here the management of the company has approached, advised them. What will you say? Yes, you have to appoint an internal auditor, even though paid a capital criteria is not required to be seen for private company, but turnover is 100 crore, 200 crores or more in the preceding financial year. That is why we have to appoint an internal auditor. Understand? Okay. Okay, that is it, and that completes our um, question and answers for accounts of company chapter. Okay. I'm planning to put the question and answer for all the chapters of company law so that it is easier and more beneficial for the students so that you can revise it at your own time. Okay? I wish you all the best. Study well. If you have any other kind of videos that you want me to put on this YouTube channel, you can write in the comment section below that, sir, it will be really helpful if you put the video on this matter or this matter or explain this concept or that concept. Anything, okay, no, any section that you want clarification in, put in the comment section below. I'll try my best to make a video for you. Okay. I wish you all the best. Like and subscribe the channel. Take care.